Good day. Greg Brown from Desjardins Financial Security Independent Network. Just want to take a minute today to talk about everybody's favorite subject, insurance. Hello? Hello? You still there? Usually when people hear the word insurance, they go running. I don't know what it is. Maybe it's just fear of the topic. It conjures up images of death. Not very pleasant table conversation. However, there are two inevitabilities in life: death and taxes. And insurance can actually take care of both. Purpose of today is I just want to talk a little bit about the different kinds of insurance and what they are used for. And when people say insurance, typically they think of two kinds: life insurance and property insurance. Now, I'm not going to talk about property insurance today because, first of all, I'm not licensed for it, and secondly, there are other people who are eminently more qualified than I to speak on that subject. I will start, though, talking about life insurance, because when people think about it, when they think about insurance, that's the first thing that comes to mind. It's also been around the longest. It's been around for over 100 years. Now, when you talk about life insurance, whether it's term insurance or permanent insurance, for all intents and purposes, what it does is on your passing or on your death, it pays out a lump sum of cash, the value of the policy, to those who are near and dear to you. Typically, it's family. However, not necessarily. Whoever the beneficiaries are that are named in the policy. There are two kinds of life insurance: term insurance and permanent insurance. Really, the difference between the two is sort of like the difference between owning your home and renting your home. So term insurance is like renting your home. It has an expiry date and it builds up no equity, no value. Typically, term insurance is used for specific purposes over a defined period of time. The most common being your mortgage. You start with a mortgage at a certain amount and over time you pay it down to zero. So term insurance is a cost-effective way to protect that obligation, that debt obligation. The other kind of insurance is permanent insurance. Permanent insurance is not insurance that you may claim on, it's a matter of when you will claim on permanent insurance. You may have heard terms such as whole life, term 100, universal life, participating policies. These are all different types of permanent insurance, but for all intents and purposes, they do the same thing. They pay out a lump sum on your passing to whoever your designated beneficiaries are. Typically, permanent insurance is used for three things. First of all, to cover your funeral expenses. Secondly, there are two inevitabilities in life: death and taxes. So on your passing, it will trigger probate fees and estate taxes. Now, for assets passing between spouses in Canada, there are not significant estate tax consequences. However, when the passing of the second spouse and the assets pass on to the children, there are significant estate consequences. Insurance is the only investment vehicle that passes without triggering tax consequences. And the last is what I call legacy issues. So this is a last opportunity to give those who are important to you another leg up on life, whether it's children, family, other people are special to you, or it could be organizations, charities. You add those three things up and that sort of gets how much permanent insurance typically is needed. So whether it's permanent insurance or term insurance, life insurance in general, when you pass away, will provide a lump sum to your beneficiaries, those who are important to you, in a cash payment. However, there are many other kinds of insurance that you don't have to die for. I'm just going to talk about a few of them, namely disability insurance, critical illness insurance, and long-term care insurance. These are insurances that you don't have to die for. They actually protect your most valuable asset. No, that's not your house. It's your ability to generate income. Because it's your ability to generate income that puts food on your table, a roof over your head, enables you to set money aside to save for what's important to you, whether that's a home, education, retirement, whatever it is. It's all done through generating income. So I'll talk about disability insurance first. What disability insurance does, if through an accident or illness you are unable to work, it provides you with an income stream. Now, a lot of people who work for companies or organizations will have some form of disability insurance. But it's important that you check and see exactly what your company policy does cover you for. Most company policies will only cover you for a specified period of time, typically 2 years. And they also have maximum limits as to how much they will pay out. So if you're earning $5,000 a month, but your company policy maxes out at $1,000 or $2,000, how are you going to bridge that $3,000 worth of income gap? So that, in essence, is disability insurance. It's income replacement. You get sick, you're through an accident or unable to work, it will provide you with an income stream. If you're self-employed or work for a small organization, you probably don't have the benefit of disability insurance company through your employer. Next, I want to talk about critical illness insurance. Critical illness insurance, the beauty of modern medicine today is survival rates are extending, are unprecedented. Major illnesses such as cancer or heart disease, which previously would have been a death wish, survival rates are increasing through advances in modern medicine. The issue or the concern, though, if should you contract a major illness, is what's the quality of care, what's the quality of life, and what's the cost associated with it. So critical illness insurance, what it does is should you contract one of 25 or so major illnesses, things such as cancer or heart disease or heart attack, you survive 30 days, it will pay you out a lump sum, the value of the policy. So whether you've bought a policy for $25,000, $50,000, $100,000, whatever, you get sick, you survive 30 days, it will pay out that lump sum of cash. There's no strings attached to the cash, so you can use it for anything. Typically, it is to enhance care while you're going through or convalescing through a major illness. We have a basic level of medical care here in Canada, but however, it's very basic. And there's a lady here close by in Langley recently who was diagnosed as being sick. Her doctor had scheduled her for an MRI, but MRI, she couldn't get in to see one for 9 months. So she went to a private clinic instead. On going to the private clinic, she found out she had a very severe form of cancer. So she was able to get treatment right away. So critical illness could help cover those costs. So whether it's seeking alternative treatment, preferred treatment, treatment elsewhere, whether it's to cover replacement income while you're off, because again, the convalescent period for these major illnesses is over an extended period of time. That's typically what critical illness is used for. Lastly, there's long-term care insurance. Now, long-term care insurance has only been around for about 15 years. And what it does is it provides an income stream should you be unable to perform 2 of the daily 6 essential functions of daily living. Things such as eating, going to the bathroom, being able to have a bath, dressing yourself, just general mobility. Typically, most people think of this as later in life, but not necessarily. So what happens if you're not able to perform 2 of those daily 6 functions, it will pay you out an income stream. So whether you've purchased a policy that's going to pay you $1,000, $2,000, $5,000, whatever that is, that's when it will be triggered. Typically, or in a lot of cases, it's used for people later on in life who start losing some of their mobility and whatnot. Typically, when I ask people later in life who's going to look after them, I get 2 responses. The most common one being, well, my family, my children. Really? What happened? Do you really want your children to be bathing you, feeding you, clothing you? And secondly, do they want to be doing that? They may not, and today with double income families in most cases, they may not be able to. What if your family's not close by? Or maybe you don't have any family? Long-term care insurance is a very cheap form of providing an income stream to help and provide healthcare services, whether that's in-home service or whether you have to go to another facility for that level of service. And it's not just for old people. I mean, if you think of Rick Hansen, when he had his accident tragedy going through his recovery period, long-term care would have helped facilitate some of those costs as well. So there you have it. Those are the different kinds of insurance. That's sort of typically what they're used for. We generally use insurance to form the foundations of any solid business or financial plan. Because at the end of the day, protecting your income will enable you to set money aside for what's important to you and what you're saving for down the road. Strongly encourage you, if you have any questions, to speak to an independent financial advisor. Actually, studies show, if you were on my Facebook page recently, you would have seen I posted up a recent article in the Financial Post. A study that was done that was showing that individuals who use an independent financial advisor for a period of 7 to 14 years are 99% wealthier than those who do not. Yes, you heard me right, 99% wealthier. And the number for those who use a financial advisor, same study, for 15 to 20 years increases to 173% more wealth than those who don't. There's a couple reasons for that. Independent financial advisors have access to a number of tools and resources, and they're not emotionally invested. They have your best interests at heart. So again, strongly encourage you to speak to a financial advisor to structure a nice financial plan for you. I hope you found this information of use. If you have, feel free to share it with others, and I hope you have an awesome day.